Hey, what's going on, my friends? In this video, we're going to take an updated look at our dividend portfolio. As you can see, we're currently over $1,000 with our $25 a week dividend portfolio. Pretty exciting considering we started this portfolio back on February 1st with $100, and now look at us, over $1,000. So some of you guys might be wondering, what the heck is this jump here? I think one of the key things people got to keep in mind when it comes to creating your own dividend portfolio, certainly you don't want to feel overwhelmed and be kind of worried or freaking out. It's really simple. And having something like this where you literally contribute only $25 a week will eventually add up. And as you can see, this is over $1,000. When we look at our past week, our gains were up $17.72. That's a return of 1.75%. When we jump out to 1 month, that increases to $26.88. The past quarter, this is pretty much our all-time, but you can see $90.36 with a return of 13.99, and 1 year all-time is $93.79 with a return of 15.60%. Now, this initial cash flow that we put, the net cash flow, which is how much money we've actually contributed to this portfolio ourselves, is $954.78, which if we put this same amount of money inside of a savings account or checking account, this would not be over, I mean, maybe it might, I'd have to pretty much do the simple math, but it might bring you to $1,000, but it's not going to exceed $1,000. No one's giving you an interest, return of over 15%. And of course, this is a dividend portfolio, so this return, as we pretty much just saw when we jumped out to a quarter or a month, it's going to change. Not always going to be this same 15% that we're currently looking at, but hey, if we needed to add our money to a savings account and wanted to see it grow, if that was the goal, to make money, and you're like, hey, I got my savings account, have your emergency savings account, but after that, you might want to consider doing something like a dividend portfolio, because this eventually is going to exceed $10,000, and before you know it, you're going to be able to use that money towards whatever it is you are saving towards, whatever your goal is, whatever you have as a why. This dividend portfolio might help you with attaining and achieving those goals. Now, when we jump down to our slices of our pie, different companies we have in our portfolio, I don't know what the order is for the third company who is here in our top 3 from last week. When we look at our top 2, again, we have our REITs dominating things. Our return for Newt is almost 32%. Killing it. And then Realty Income Corp is about 21%. After that, we get into our kind of regular companies, and you can see it jumps down not much with 3M at 19%. After that, AT&T is about 17.5%, PepsiCo almost 15%, JP Morgan a little over 14%, Coca-Cola almost 14%, Johnson & Johnson almost 11%, Verizon a little over 10%, and Procter & Gamble almost 5%. So things are moving in the right direction. Things are moving forward. Over the past week since our last portfolio dividend update, you can see, or I think so. Yeah, I think these came in. Did these come in right after or right before? I think these might have came in right before I made the last video or right after. There's it might have been that day, because I might have did it on a Monday, which I think, I think there was Monday, yeah. So either way, when we look at it though, you can see Verizon paid us 95 cents. AT&T paid us $1.50, and JP Morgan a few days earlier had paid about 50 cents. These are those dividend payments that we're going to see continue to grow to a larger amount as we add more money to our dividend portfolio. So when we're able to say, hey, we have 20 shares of one of these companies in here, you're going to see that dividend payout that we just saw increase from 50 cents to $5 or $10 or however much it's going to eventually add up to as we continue to contribute to our dividend portfolio. That's the key thing, my friends. You just jump in here. Some of you guys might be wondering, hey, I want to grow my money to over $1,000. How do I do that? And it's really simple. I have a link down below to M1 Finance, which is this same exact software, and it's so easy to use to create these pies that allow you to add whatever whatever company you want to add in here and decide what percentage of the pie you want it to take up. Maybe you want this company right here, which is Coca-Cola. If you look down, you can see it's highlighted. Coca-Cola, and it says right there too. Maybe we would want that to be 20%. So it would take up for, Coke and AT&T's portion of this pie. These two slices would be one company then, which of course means we'd have to sell AT&T. We don't want to do that though. So, all you really do it, again, click the link down below in the description area to create your own M1 Finance account. I believe if you start it and fund it, you are given a free $30 using my link. So that's more than one of your weekly contributions that you're going to see in here. One of these little jumps that we're seeing, that's that jump, meaning that a $25 contribution was made right there, and you can just see it jumping up. Oh wait, another little jump there, big one. Those jumps are those $25 contributions, and you starting your account with $100 like we did here on February 1st, add that first $25 and bam, you're going to be on your way. The next thing you know, you're going to be over $1,000 just like us. Now, of course, this is not financial advice. All of the companies in here, they're businesses. You're not guaranteed they're all going to be around in 5 years from now or 20 years from now. Of course not. However, chances are pretty strong and likely that these few companies will be around. And if not, that's fine. The beauty of this portfolio is it's so easy to edit it, to change it, switch out a company, add a new company. But for now, we're rolling with all of these companies because they're all producing pretty good returns. So far, I have no issues, no complaints. Sometimes the ones that don't produce the higher returns that we saw and have such great 31% are also the ones that are kind of more reliable or stable or will just be more consistent through the ups and downs. And that's part of the key to having a nice diversified portfolio. You're able to weather the storm and come out strong when things aren't going well. When the market crashes, when everyone's panicking and selling, you're sitting there chilling, buying the dip and just going with it because you're with this company for the long haul. And despite, maybe some negative press because something didn't go so well when it comes to Americans taking a particular product, I'm not going to say a name, but I'm highlighting them. Johnson & Johnson, for example, was, I believe, down quite a bit. I think we were negative something like 2 or 3 weeks ago or 3 videos ago. Now look at it. It's over 11%. We didn't sell it. We didn't panic. We didn't freak out. We continued to buy and we're rolling with it. And now we're up. We got almost $7 right there. So my friends, start your dividend portfolio. And maybe it's not even going to be a dividend portfolio. Maybe it's going to be a portfolio that includes some dividend companies. They don't hurt. I know some people are like, no, I just want growth companies. I only want growth. To be honest, some of these companies can still kind of be looked at as a growth company to some degree. Not really, but yes. If you believe in them for the long term, that's what it comes down to. Will Pepsi and Coca-Cola be around in 20 years from now? Honestly, it's weird, but I think they will, but they're going to have evolved even more than what they have. Like they'll have their hands in more in other industries, I believe, and continue to invest. One of them will. That's what I think. One of them's going to kind of, I don't know, maybe not. Maybe they'll continue to dominate beverages and whatnot, which is completely fine as well. The goal is, are they going to continue to focus on just Coke and soda or continue to expand and get kind of energy drinks and health drinks and things like that under their umbrella? Companies need to evolve. The ones that tend to stick around longest are the ones that do. They manage to transition with times and the change, and I believe most of these companies are doing that to some degree or another. So I'm going to wrap it up there. I hope you guys found this video helpful. We are up over $1,000. Yeah. And imagine if you were contributing over $25 a week. If these $25 a week contributions were $250 or $50 or $100, this would be much, much larger, and you would be killing it right now. Either way, we are killing it right now because we are finally over $1,000, and just since February 1st, not too shabby. But all right, my friends, let me know what you guys think. Are you investing in any of these companies that we have in our dividend portfolio? Do you have a dividend portfolio? I know someone was saying on another video I made on my other channel, they're like, I don't really like the dividend portfolio, dividends. I want growth. Hey, to each his own. I believe you can have both. I don't think it's going to hurt you to have both, but it also depends on your particular situation, your stance, how much of a long-term goal you're focused on, or maybe you have some shorter-term goals, and nothing's guaranteed, nothing's reliable for certain, aside from the fact that you should consider starting a dividend portfolio. Check out my link down below to M1 Finance. I also have a link down there to Webull, where you can get some free stocks if you sign up through Webull. Yeah, get the ball rolling, my friends. Click those links along with that subscribe button, that notification bell, and the like button, because I do appreciate you guys spending some time watching this video with me as we build out our dividend portfolio. You know what it is. You guys know the vibes. It's all about that financial independence journey and helping you, help me, help myself, helping us all move forward towards financial freedom. That is the goal. That is the goal. And I think, hey, a dividend portfolio might not necessarily achieve it within itself on its own, but it might help you. It's going to be another contributing factor that's going to help you during that growth stage, helping you use your money to grow your money and grow itself and work itself. That's what it comes down to. Growing it all in a savings account? Yeah, you want your emergency savings, maybe one or two of them, whatever your process is. But after that, get your money in a dividend portfolio or a regular portfolio where you can continue to invest a small amount or a large amount on a consistent basis and watch that money grow. But all right, my friends, I got to keep it moving. You already know I appreciate you guys. But yeah, I'll see you guys in the next video. Peace.